Let's begin. For some time now, I have been urging investors and clients that they hold at least 15% of their assets in the precious metals. This has been based on my speculation that the monetary system is rebuilding, and from the fact that in 2008 we tried to solve a massive debt problem with more debt, and that meant that if we followed historical precedents, it only led to one road, and that was a shift in the currency reserve system, or a shift in the way that the world's monetary system was set up. That shift is based on the historical rule that power and monetary systems always rebuild around gold when faced with massive amounts of debt. It is my opinion that the credit cycle that we've been in is coming to an end. In 2015, I set up the Special Opportunities portfolio as a strategy to benefit from the power shift that was occurring and the historical precedents that history gave us as a roadmap for what comes next. It is my opinion that that power shift is here, and it is called the petrodollar. It is the way by which the Chinese have told us they are going to transfer the monetary power over to them. And that has some serious consequences. And the best way to understand those serious consequences is using the terms used by the Chinese, or the two symbols used by the Chinese to describe the word danger: crisis and opportunity. I think going forward, we face some massive global economic crisis, but also much opportunity as the power shifts and as history once again repeats, because, ladies and gentlemen, it's not different this time. What am I talking about? To start this presentation, I plan to show you what is the setup of the current monetary system, how it's about to unwind, and what does it mean for us going forward. The first thing to look at, and the first signal, is to look at the US dollar index, or the basket that composes today's modern currencies. This index is the basket of the US dollar and the Canadian dollar in North America, the euro and the pound in Europe, and the yen, the yuan, and the Aussie dollar in Asia. Now, first of all, it's important to recognize that the US dollar has been dropping since the night or the week of Trump's inauguration, when it hit a high of 103. Ever since, we have had about a 12% decline in the dollar, and I believe that that decline is about to accelerate. We've had a number of technical signals warning us of something ominous coming. This recent bounce that we've been in since the fall of last year is about to end, because the petro yuan is about to launch. I'll get into that later. For now, what's important to understand is that the market has been climbing, and all people are concentrating on worrying about is the rise in the market. The market last year returned 22%. However, if you take out the dollar, it only returned 10%. My argument is that history is fully repeating itself to a similar pattern that played out in Germany in the 30s, because as the currency accelerates its decline, we are going to start to see negative real rates of return. And that is a problem that people won't fully see at first. Before we move forward, we should go back to understand what is the global reserve currency system. The global reserve currency system is the money by which the world trades. Historically, one country has shared that power. That power has always transferred until 1970s through gold, because he who controlled the gold reserves controlled the power. That is exactly how Roosevelt was able to transfer the monetary power from the British pound to the dollar, because by 1930s, the US had acquired 8,900 tons of gold, or just about a third of the then gold circulating within the global central banks, or 27,000 tons. That was the money stock back in the 30s. Today, the world has about 37,000 tons circulating among central banks. And that's a number that's important that will become relevant a little bit later. However, for now, let's focus on what has transpired over the last 40 years, because in 1971, Nixon unpegs the dollar from gold. So therefore, breaking this trend that had taken place for almost 400 years and has been the norm for 5,000 years throughout civilization. We have been in what's called a fiat currency system, in that it's not backed by anything but the word of Caesar. Fiat, that's what it means. It's a Roman term when monies became backed by nothing. It has been a problem all along, and I think it's a problem again. But in order to understand what has been the glue of the monetary system, we have to go back to 1975. Between 1971 and 1975, the world starts to go into a massive monetary problem that created a lot of inflation and stagflation. By 1975, the OPEC crisis is fully on, and the energy prices are starting to go through the roof because of devaluing money. By 1975, the Americans are ready to invade Saudi Arabia. America was the world's biggest consumer of energy, and Saudi Arabia the biggest supplier. However, that invasion is avoided because of the deal that Henry Kissinger strikes with the Saudis in February of 1975. That deal was the creation of the petrodollar. And it's important to understand how the petrodollar works, because it's the glue that has kept the US dollar as the currency reserve for the next 40 years. And I believe that is about to come to an end. What the US dollar allows for is gets the Saudis to only sell oil or energy in US dollars, forcing OPEC to only sell energy in US dollars, therefore forces the world to need to start to acquiring dollars to pay for energy, the biggest piece of trade. And since these were going to be long-term purchases, they also start buying US debt to hold in order to pay for energy, thus resetting the US dollar, or extending the reign of the US dollar as the currency reserve, but based on debt, or a credit cycle that started at this point and is now coming to an end, in my opinion. Let's look at this credit cycle that has been building ever since. It took us 100 years. What we have here in the purple line is actually all of the money that has been printed by all central banks, by the biggest central banks in the world: the European, the Americans, the Swiss, the Japanese, and the Chinese central bank. It took us 100 years to get to almost $150 trillion worth of debt. It has taken us another 10 to add another 70 trillion. So today we sit at $270 trillion. All of this money has been entering the system and has been, as always, creating quite a bit of inflation. Most of this inflation has showed itself in the stock market, as showing in the returns of the S&P 500. I can tell you that this is inflation because had the market actually kept up with actual economic activity, looking at the average growth over the last 10 years, the market would be right here. This difference here is inflation. Inflation is showing through the share buybacks, for example. Because rates have been low, corporations have been able to borrow a large amount of money to buy up their shares, reducing their share structure, making things look better. But that is not economic activity, that's the financial facade. Another part of that facade has been that central banks have actually been buying shares with printed money. Another issue is, for example, ETFs, where today we have 2 times lever, 3 times lever, and all those products are based on money that is just floating through the system. And that is a concern because it's not real. Now, one of the problems with that is that if it's real inflation, how come the inflation alarm of the system, the price of gold, not been working? This is what has happened to the price of gold, in essence, signaling that there is no inflation. So why is the inflation alarm not working? Well, that is a problem, something that I've been pointing out for quite a long time. It's not just me talking about it, it's also this chap, the head of the Chicago Mercantile Exchange, the chairman, Terry Duffy, when asked last June the very same question: how come gold as an inflationary alarm isn't working? I want you to listen carefully to 3 points he makes.
But we haven't seen it into the metals. We haven't seen this if you're concerned about, for example, global crises. And we see a little bit when we see the, a dust up with the North Koreans, or there's a brief run up, then it runs down. But what do you think's going on there, or beneath the scene? Is there something that we're missing?
Well, I think that's really interesting that, what you raised, especially with the metals, because if you look at the price of gold today, just around $1,200 an ounce. And if you look at back in the early 80s, it was trading around $800 an ounce. So if you adjust for inflation, you should have gold somewhere around $2,000 to $3,000 an ounce, but we don't. And then you look at what's going on in the world, and it should probably be at $5,000 or $6,000 an ounce, but it's not. So the reason is, I think a lot of us have become so jaded, and whatever happens in the world, it's like yesterday's newspaper in 5 minutes. So people are dismissing some of these events to a point where one day you won't be able to dismiss them, and you'll see a huge move in some of these prices.
3 things. If measured by inflation, gold should be around $2,000 to $3,000. If you look at what's going on around the world, and that is where the story really gets interesting, gold should be around $5,000 to $6,000. And lastly, don't dismiss this, because gold is going to run up, something that I truly believe, especially when you see what the Chinese are preparing to do or have started to do. Let's look at what he means by inflation. Once again, this blue line is exactly the purple line on the other chart, all the money that has been printed by central banks. We actually look at the price of gold, this yellow line, it was actually signaling inflation until about 2013. Since 2013, somebody has shut off the alarm, and it has not been ringing. One of the reasons for that why of that shut off is because had that alarm been ringing, people maybe would not be so adamant to enter the stock market and believe this facade that everything's great. Gold at $3,000 would actually make many question what is happening with the stock market right now. How have they done this? I'm going to use the silver, what's happening in the silver sector, because silver is the exact same thing has been happening. But with silver, we can more clearly see because the manipulation has been even greater. What is happening is actually the sale of paper contracts within the futures exchange, what Terry Duffy's warning about. This is happening at the COMEX, is being done by somebody. He's not the person allowing it. All he does is run the exchange, but he's warning us that this is occurring. What is happening is that back in 2013, they would spend about $1 billion in the middle of the night and sell paper contracts, not physical gold, but future promises on future production that is not controlled by those selling it. Now, back in 2013, they would spend $1 billion in the middle of the night and push the price down for another 2 to 3 weeks. It's important to understand that this mechanism cannot continue to work, because today it's costing too much money. In December, they were averaging somewhere between 5 to 7 billion a week, keeping the price below 1,300. And this can continue because of the second point Terry Duffy makes, what is happening around the world. And around the world, gold demand is going through the roof. First of all, a key warning or an alarm is, why are the BRICS setting up a gold trading network? Gold is supposed to be a pet rock. Why is China, why are the BRICS bothering to set up a gold trading network? Another key warning within this is what's happening in Russia. Russia has now become the 5th largest gold reserve holder in the world. Now, this has come about because Russia has been sending home 50 to 70 tons of gold from their energy sales. They sell oil to China in yuan and euros into Europe, but instead of taking home euros or yuan, they are converting those immediately to physical gold and shipping them home. Another country that has been acquiring quite a bit of gold is Iran, because when the US put the sanctions on them, they continue to sell energy to China, and China was paying for that energy using physical gold entering to Turkey. One clear alarm within signal that should be ringing an alarm is, why is Qatar asking Iran and Turkey for help? That to me is a clear signal that something afoot, because up to now, Qatar has been one of the US's biggest allies in the Middle East. As a matter of fact, the two biggest military bases in the Middle East for the Americans are in Qatar, not in Saudi Arabia. So why is Qatar asking Iran for help? Another clear signal is the fact that a week after Trump visited Saudi Arabia, the king of Saudi Arabia traveled to Russia, was there for 3 days, and does an energy and military deal with Russia. Also of note is the fact that right after his return, his son started implementing the arrest of all these sheiks in Saudi Arabia. What I believe is going on is that Saudi Arabia is leaving the petrodollar system. And that to me is clear when we see what is going on in the Middle East. First of all, what is happening here is the Great Game. The Great Game was the term that the British gave their understanding of the fact that by controlling this period of the world, they could control the economic flow between Asia and Europe. That was the main reason why they controlled India in the 1800s. They understood that by controlling India, they controlled the commerce that could flow between here and there. Today, the Great Game is going on again, but in my opinion, it has already been lost because of Syria. First of all, the fact that the Americans refused to invade Syria and take on the Russians clearly meant to me that the petrodollar was broken, that the Americans were going to protect and stand by the Saudis no matter what in the Middle East. That is the reason why Qatar was the first country to jump. The reason why Qatar jumped over to Iran is because Qatar needed those pipelines. Qatar's energy is 50% natural gas, 50% oil. The fact that they did the deal with the Iranians means that they understand that in order to get their natural gas, which they share with Iran, who's already selling it to Asia through the pipelines that have been built, is just to build a pipeline across the ocean here, hook into their pipelines and start selling energy to China. However, China has not been wanting to buy energy in US dollars for the last 3 years. It's the reason why Saudi Arabia has been reluctant to sell energy to China. Now, Russia has no problem with that, and they already have pipelines built and set up to go into China, and they've been getting paid with yuan, but again, they are immediately converting it to gold. Now, gold is the key because the power shift is here, in that the Chinese have set up a petro-yuan that is 100% convertible to gold. In essence, ladies and gentlemen, this will destroy the petrodollar, because once again, the world's biggest energy consumer has told the world's biggest energy producers how they are going to pay for energy. And this would dislodge the petrodollar and become the story for the next 2 years, the de-dollarazation of the world. Something that has already started, is accelerating thanks to Trump's tweets, and now will only accelerate as China decides what currency they are willing to pay for energy. Let's put this in a different way. If China started paying for its energy consumption on a daily basis today at $1,300, it really means that China would need to come up with 10 tons of gold a day. That would dissipate their current reserves rather quickly. What it's really signaling is that the price of gold is too low if it started to function as money again, which is about to start doing. The price of gold, another way to look at this is what would have to be the price of gold today to satisfy the energy trade as money? In essence, had Nixon not unpegged for gold, what should be the price of gold today in relation to the global trade system in value of trade? That number is much higher than 1,300. And that is a number that gold will find as we go through this transition from one monetary system to the next, as we devalue the dollar. Why is that inevitable? Because once again, the reserves of gold have transferred away from the West into Asia. And today, China controls more than 18,000 tons of physical gold, or more than 3/5 of the now 37 tons of gold shared between central banks. This fact means two things: that some central banks are missing their gold and they're holding paper contracts, And second of all, the fact that now China can dictate the currency by which they are going to trade the Silk Road or there in their backyard, and can control the money supply of the world. In essence, just like the US did in 1933, today China controls the money supply. Why is that important? It's important for us because once again, history is about to repeat itself, something that I recognized a number of years ago. Go back to 1933. In 1933, had you had $10,000 at the beginning of the 30s, by the end of the recession, you would have walked away with only $2,500 to $3,000. Had you held $10,000 in two stocks, Alaska Juno and Homestake Mining, the two biggest gold producers at the time, by the end of the recession, you would have walked away with almost $90,000. Why? As the monetary system shifts to deal with the debt problem, gold goes from $7 to $35. The producers are producing it at $5. When gold's sitting at $7, they're generating $2 an ounce profit. At 35, it's almost $30 an ounce profit. The same mechanic is presenting us with an awesome opportunity again, something that I recognized years ago. Many of those that are clients in this call will recognize a lot of the companies that we own. Those have already started functioning in this way, and the leverage they face going forward because of this reset is the benefit to us. As the power shifts from the dollar to the new petrodollar, the key beneficiary will be the price of gold and our gold holdings. This is the reason why the portfolio has already started working. Back in 2015, this process has already begun. However, the composition of the portfolio is based on four main investment criteria. It's stock picking through excellent management teams, low-cost production with increasing production guidance, high reserves on the ground, and in countries of low geopolitical risk. This is the composition of the portfolio. Management is key, geopolitical risk next, because we don't want our properties expropriated, and reserves on the ground and low cost of production, because this will give us the best leverage to this run up in the price of gold. However, going forward, you also have to be aware that crisis, it's on its way. The opportunity is the power shift. The crisis is the stagflationary environment that is setting in. And here is where Alan Greenspan comes in. This is an interview he did last June, warning us about what's ahead of us. Once again, he's speaking in Greenspan terms, so I will translate once we're done. I want you to hear out for one key point that he's going to make.
Let me ask you this, Dr. Greenspan. We know that the Fed has begun raising interest rates. We've been sitting on free money for so long now. Are they going to raise rates and smash what has been a fractional sort of recovery in the economy? I mean, do you worry that higher interest rates are basically going to stop any recovery that has just begun to gain traction?
Leaving the Fed aside, let me talk in terms of where the market pressures are.
Okay.
I don't forecast what the Fed is doing.
Right, of course.
They never did when I was in office. I don't want to second guess them. But there are pressures obviously emerging for long-term debt to start moving up. It's an extraordinarily low level. As the inflationary pressures, which now seem to be building, we have just been through a long period of stagnation. We're moving now towards what we used to call stagflation, in which the short-term outlook begins to look sort of a slightly buoyant because the inflation actually moves profitability. And you get a sense that maybe things are over, but that's going to be a false dawn. We've been through this period before of stagflation back in the 1970s, and it's going to be very tough to get our way beyond it.
Let me ask you this.
Inflation starts to move profitability. Very important, because that's exactly what is happening today. Everything's great. Earnings are picking up. the economy is picking up because earnings are picking up on a global basis. That is the facade, because what is really happening is that because the dollar has dropped 12%, it appears as though earnings are picking up when companies convert their European and Asian earnings back to US dollars. So therefore, on the conversion, they have improved by 12%. It's not that the economy is picking up, it's that the currency is dropping. The problem with this is that as the currency drops, accelerates, the cost of living is accelerating at a faster rate that those profits, between quote, are going to accelerate, leading us into stagflation, no growth, because input costs are growing at a faster rate than the companies can adapt to that change. And this is the reality, that if people are just looking at the market on nominal basis, the market next year could continue to go up much higher. But what you have to understand that as the currency accelerates on the downside, as the Chinese launch the petro yuan, it's inevitable. We are going to see negative real rates of return, in that the market's going up at a much lower pace than the dollar is dropping. The same effect happened in Germany in the 30s through that cleansing. At first, Germans were very happy with Hitler because the market was going through the roof and everybody was feeling rich. What they never noticed, though, that was a result of a declining currency. Once they figured out that that was happening because the cost of living started going through the roof, it was too late. They were already in a hyperinflationary slaughterhouse because the currencies continue to accelerate. With the setup that we have going forward, that is exactly what's about to happen. As the petro yuan kicks in, the US dollar will decline because the world is de-dollarizing itself and walking away from doing trade in dollars. In essence, what the Chinese are saying is that Asia is our backyard, we control it, and there's no need to use dollars in this trade. We are willing and we want to use exactly what we used during the last Silk Road. The economic environment that existed from the time that Marco Polo gets to Asia to the time that the British take control in 1842 with the annexation of Hong Kong and Taiwan, gold. If we look at going forward, what we are about to see is a complete replay of the 80s, exactly what Greenspan's talking about. Inflation is coming back, and the cleansing that was starting to take place in this period that was avoided because of the petrodollar, again, Henry Kissinger sets the petrodollar right here. By the time we get to $800 gold, yes, Volcker was able to raise rates up to 22%, killing the rise in the price of gold and inflation, but also the main catalyst for that decline in inflation and rates was the fact that by then the US dollar and US debt were being acquired by the world to pay for energy. That credit cycle is coming to an end. And so what we are about to see is a much faster or higher rates of stagflation and inflation as the system cleanses itself. That is inevitable. And just like in the 30s, gold is about to reprice to a much higher level, not this time because a government has dictated it, but because the Chinese, as they start to use it as money, will allow it to find its true purchasing power, and the dollar as well will find its true purchasing power. That process has begun, and over the next 2 years, we will see a complete shift in the monetary system. In essence, the king is dead. Long live the new monetary system that will carry us for the next 300 years. In essence, that is the end of my presentation. Oh. End the meeting. Any questions?